Joining me now is NFJ Investments, Burns McKinney. It's good to see you. Set up September for me first. What's going to happen this month?
Well, investors are focused currently on what the Fed is going to be doing at their next meeting, although we believe that the focus should really be not necessarily on what the Fed does in September, but how high rates get and how long they keep them that way. The equity investors were a little bit surprised by what Jay Powell had to say in Jackson Hole, and they really shouldn't have been. Bond investors seem to have been pricing that in. And really what the Fed has done a good job of is trying to manage expectations. In many ways, what Jay Powell's trying to be is the parent with kids in the backseat on a long road trip. They're saying, don't make me stop this car. You hope the threat works in and of itself. You don't actually hope to have to stop the car.
Yeah, there's some belief as to whether he ever will stop that car. Anyhow, let's talk stock picks for September. Number one, FedEx. We alluded to it in one of our teases. Why this one? Why now?
Well, right now you're getting FedEx at about 9 times earnings. The logistics and shipping peers trade about 15 times. UPS is about 15 times. So right now FedEx is trading at a discount to its peers, and you're getting it for about half the market multiple. You have a dividend yield of about 2% that they raised earlier this year by 50%. That's a huge management vote of confidence in the direction of future earnings. And you've got a name there that they benefit from rising demand for e-commerce, and really in an inflationary environment, to protect against inflation, pricing power is what you want. And because they have a duopoly with UPS, that's really proven to give them a fantastic ability to pass on price increases.
Yeah, forgive me, I didn't mean to interrupt you there. Excuse me. Verizon, VZ, number 2 pick.
That's another one. Right now, it's even cheaper at about 8 times earnings. This is the cheapest Verizon's been relative to the broader market in about a decade. It trades at a discount to its global telecom peers. You have one of the highest dividend yields in the S&P 500. And again, that's supported by a fantastic free cash flow yield. And you look at the names like Verizon, they really benefit from just rising demand for digital content. In many ways, in today's economy, this is your new pick and shovel type play. And they have a solid balance sheet, and because of investments in new spectrum, they should have one of the best networks going forward.
Of the 2 you have left on the list here, Baxter International Medical Devices and Lennox International, which you call a contrarian play, which of the 2 do you like the most?
I think there's a great case to be made for the medical device companies like a Baxter. You're getting Baxter again. It trades at a discount to its peers, a discount to the market. It's a lot cheaper than it's historically traded. You have a name there. They do have a dividend yield of about 2%, and they dominate several markets in medicine delivery. Things like, dialysis equipment, IVs. Really, a lot of what they treat are, they provide non-discretionary consumables for chronic diseases, which means, for better or worse, a lot of what they're providing provides visible revenues, it provides predictable revenues, and it makes it defensive in what is likely to be a little bit of a volatile and an uncertain economic environment going forward.
All right, we'll leave it there. Burns McKinney, thank you so much. We'll talk to you soon.